So I'm gonna go over a little bit of mental stuff. It's pretty easy, stick to your risk management, how many trades you're gonna take, what is the parameters of it, you know. These are the moves I look for. Look how many of these are everywhere, bro. But you have to get in where you fit in, you know what I mean? So you have to get in at good places, good times, and good moves, right? So imagine you could do range, you could do trend lines, you could do whatever, but stick to something that works for you, that you can stay consistent with for quite some time, just like everything in life. I mean, nothing comes overnight. So just believe and take action. Okay? Take action, continue to grow, continue to learn, and do all that. Because there is no other way. You know what I mean? So just make sure that you're doing your thing when it comes to marking your lines, marking your levels, saying, hey, where does the market want to go? What does the market want to do? And you just plan accordingly. Hope for the best. You know what I mean? Guess. Fucking do what needs to be done. You know what I mean? Study the terms. Learn what a tick is. Learn what a point is. Learn how much a tick move is, how much a point move is. So make sure you're on that. You got to know that each tick, which is this. Look, this is a point. Okay, 48 to 49 to 50. So each increment of 1 is a point. Also, each point, 25, 0.50, 0.75, that's a tick. Okay, so that's what you got to learn. Where from 480 look to from 6749 67 from 6749 to 6748. Okay, that is a point. Okay, that is a point. From one number, from a 1 to a 2, that's a point. So from a 8 to a 9, 9 to a 10, 10 to 11, like that, that's a point. Okay, and then in between, I'm not going to erase that because that's a level. In between that is a tick. So that's a tick. That's a tick. And that's a tick. Okay? So these are ticks. So there's 4 ticks per each point. Okay? 25, 50, 75, 100. There is 4 ticks per point. Each Let me see. Hold on. For ticks per point, one tick price movement, one tick price movement is equal to $12.50, and then 1 point movement, 1 point price movement equal to $50. That's with one contract. At one contract. So when you buy futures, you buy contracts. One contract is 12. One contract, it moves up one tick. Say I bought at 48.25. I sell at 48.50. That's one tick. It moved up. Vice versa. I bought at 48.50. It moves down to 48.25. It goes down a tick. Right? We just made $12 or lost $12. Depends if you went, if price went with you or against you. So if you buy at 48 and you sell at 49, the price just moved 1 point. Okay? Simple as that. Okay. Next. Next we'll do trends. Okay? We could do break of structure or whatever. Now let's just do trends. Okay, look. Think of it like this. Okay? When the price is moving from the top corner area, right? The top corner area to the bottom corner area, right? From left to right, that's a downtrend. Okay? And then when it's moving from, when it's moving from the bottom left to the top right of the screen, that's an uptrend. Okay. Look at this as you zoom out. Okay. See, there's many trends. The smaller time frames, there's many trends, and inside those trends are other mini trends. Look, inside those are other mini trends. See, this is the shit I drew out, right? Inside those, there's mini trends as well. Which is this. See, look, same thing. Top, left, bottom, right, down, and mini uptrend, downtrend, uptrend, downtrend, right? So that's where you figure out with the higher time frame, say like a 5 minute, it's a little clearer, right? And as you get further out, it's even more clearer. It's even more clear and simplified, right? So you look at the higher time frames to get an idea of where the overall trend is going, right? Because this is more powerful than this little move, right? So that's trends, right? So to figure out when the trend changes, there's other forms, right? There's other things, but so it moves. We're going back to trends. Look, right here was a swift downtrend. It was pretty tough. Some news that happened. Trump tweeted tariffs, China stuff, whatever. So downtrend. There's downtrend. Let me see. There's, look at this, like a uptrend. You see how it's from down here to up here. Uptrend. See, and there's a downtrend, uptrend, and then there's consolidation period, consolidation times, which means it moves from left to the right of your screen, right? It doesn't have to be a straight line. It can go up and down and up. Look, we've been in a consolidation period for quite some time, right? From a bullish trend, which is a trend that goes up, right? And then a bearish trend is a trend that goes down, right? So we'll do a bull trend. Uptrend. Uptrend. We'll just do uptrend. Right? We'll do bullish trend. Bullish trend. Uptrend. Pause real quick. All right, so when they say the market is bullish, that means it's in an uptrend. Okay? When they say the market is bearish, that means it's in a downtrend. Okay? Simple as that. And then when the market is, let's see, how can we do it here? And right here. When the market is like this, right, like this, kind of just stuck in the middle, left to right, right? It's consolidating. Consolidating. So it's a ranging trend. Means this, where it's like it's in a certain area, right? It got these highs. It got these highs, this low, this high, this low, So there's little trends inside of that, but you're not looking for big moves there. You're just seeing, okay, the market's just there, right? In that area. See how it's left to right, left to right. Now, what did it do? Downtrend, right? From consolidating back in the day, last week, week before, see, uptrend. What's it doing? Well, there's little trends in that, right? So it's consolidating, consolidating, and it was in an uptrend before, right? You see? But look how far we were just in this kind of area. This kind of like 700 ranging area, right? So that's that. Okay, so bullish trend is up, bearish trend is down, consolidating. It means it's ranging. It's a ranging trend. It means it's like in one kind of general area, left to right. Okay. Okay. And there are indicators of how to see when we're in a bearish trend, bullish trend. When see from, okay, look here, consolidating to what? To a bearish trend, right? So consolidating in one area and then it went down, right? After it went down, kind of stayed here, ranged here from this low to this high, this higher low, equal high-ish area, higher low, and then now we're in a bullish trend, and then back to consolidating, bullish is little moves, right? And that's where you see where there's trends inside of trends and trends inside of trends infinity. So not infinity, but till it moves a tick up, moves a tick down. So those are those basics. And next, to get in a little bit more complicated, let's see. Okay, this line is EMA line, means exponential moving average. So every 100 candles, it kind of gauges where it is. And for me, it kind of helps me see, okay, look, we're kind of dancing in between this area of where the line is, and look at this. We're definitely in a bullish trend. I mean, bearish trend. When the bears push the market down, it's on the left side or on the bottom, right? Like here. See, it's on the bottom or trend, and then it's laggy, but it just shows you a little bit. It shows you, right, kind of where it's at. So it's like we're like without it, we're in the water, right? We know what it's doing, but this kind of shows you, okay, like, hey, this is gravity. You know, it pulls you to it, pulls you away. You can jump, pulls you away, it comes back, it follows you, and it kind of like, it's like a magnet in a way. But it shows you that, right, the trends. And let's see, what else can I show you guys? Another simple thing that I can show you. Okay, let's do the candle, the actual candle. So, okay, we're looking at this big blue candle. Okay. We're looking at this big blue candle right here. So these little lines on top of them are called wicks, and this rectangle in between the wicks is called the body. So when it is a bullish candle, which means it's going up, it's blue. I have them blue because that's my preference. When it's going down, it's a bearish candle. That is gray for me. So these open every minute, every 5 minutes, every hour, every day, every month, every 15 seconds, depending on what you have it set at. So right now is 5 minutes. So every candle is a 5-minute candle. Okay. So 9:30, it closed here because it closes at the top with the bearish. Then it opens at the bottom. That's the open right there. Then it probably went down for a little bit. Then it just shot back up, leaving that wick, passing the open, which is the bottom. Then it probably went up here. Then it came back down here and closed. And at 9:35, that's when it opened. And at 9:40, it closed, or 939.99, right? It closed, and then it opened at 9:40 to the next candle, goes down, came up, right? Let's see. Came up, made a wick, so it opened here, did this, whatever, closed here, 9:45 candle. Now what that one did, since it's a bear, it opened here, probably continued up, and then it shot back down, pulled back up, closed here at the bottom. So it's the opposite. On the bullish one, it opens at the bottom, closes at the top, right? The wicks, sometimes they don't have wicks like this one. Sometimes they have really big wicks, sometimes they have itty bitty wicks. It depends. But with the bullish candle, right? These blue ones, opens at the bottom, closes at the top. Vice versa with the bearish candle, it opens at the bottom, it opens at the top, closes at the bottom. Okay, so okay, let's get this little pop quiz. What candle is this? Okay, so closed here, right? So it closed here at the bottom, opens at the top, closes here. It probably went down, pulled back, closed here. Now, what is this? Bullish candle, opens here, probably came down a little, pulled back, went up, went all the way up there, pulled back, closed here. All right. What does this do? Opened here, probably went up, pulled back past the open, came back down, pulled all the way down there, all the way down here, came back, closed here. Open here, closed here, open here, closed here. Open here, closed here, 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 open here, closed here. All right, open here, closed here, and you get the picture. Okay, that's simple. Now you know what the structure of the candle is. Easy, right? Okay, this This is Top Step. It's a prop firm. Prop firms allow you to pay little money so you can test your skill out to see, hey, am I a good trader? Yes. Am I a good trader? No. And they front you money. They front you money to make money. Right? This is a practice account. You can open up a practice account and practice once you have your strategy and all that stuff. So you got all that info, and I hope that helps. All right. Peace.